Well, the last time you were all together for a physical event in India was 2018, right? Yeah,
Correct. Correct.
Good to have you all here virtually this time. Everyone, welcome. We're just giving a minute or two for people to join in, and we'll just kickstart it. Don't worry.
We'll start in about a minute. Good evening, everyone who's joined us today. We'll get started shortly.
I just wanted to acknowledge all the friends here who are, waiting. I know can't call each one out, but recognize all the names and faces. So hello, everyone. We should be getting off the ground in a minute. And I know many of you know each other, so feel free to use the chat box and say hello. We do have, not everyone is got the mic on. So. And I know Cliff and Rosemary, Fran, I know last week there was some interesting guidelines coming in from European Union. So if some of you feel like talking about those, please do. But Harpreet, look, we should just kick off. I think people will keep joining in and, I think let's just kick this thing off. So over to you.
Thank you. Thank you, Amit. So good evening, everyone, and also good morning and good afternoon to our esteemed speakers and part of our audience who's joining us from different parts of the world. I'm Harpreet Kaur, Director of Knowledge Development at Aspire Impact, and I'm elated to welcome you all for the launch of a research publication titled The Size of ESG, Sustainability and Impact Measurement and Management Market, or more commonly referred to as the IMM market. I must confess that this is my first research publication of such magnitude, and I'm genuinely thrilled to see my name as an author in this little book, which we believe is going to be a landmark in the IMF market sizing space. So today, for this first for the world unveiling of the market size, growth prospects, and crucial findings about the IMM landscape, we have with us our several esteemed guests. Let me start off by introducing and welcoming them. First, we have with us today Mr. Cliff Pryor, the CEO of Global Steering Group for Impact Investment, or GSG. He was formerly the CEO of Big Society Capital and Impact Wholesaler in UK. Second, Professor Rosemary Addis, Managing Partner at Mondial Impact and also an ambassador at GSG, as well as Enterprise Professor, Impact, Sustainability and Innovation at the University of Melbourne. She helped Australia set up their National Impact Investment Body, or NAB. Third, Ms. Fran Siegel, she's the founding president at US Impact Investing Alliance. She's also the executive director of Tipping Point Fund on Impact Investing that provides grants to build the impact investment ecosystem. And finally, Mr. Kumar Anurag Pratap, who's the VP and CSR leader at Capgemini. Capgemini is also the sponsor of the Impact Future Project, or IFP, under whose aegis this landmark research took place. This is the third successful year of IFP, and this is the 11th publication being released in this series. We will soon be releasing another publication about the roles of the emerging chief impact officers, which we'll do a little later during the year, perhaps around Q3. So a warm welcome to all of you. I am also joined by my colleague and co-author Amit Bhatia, who's the founder of Aspire Circle, a not-for-profit forum promoting enlightened social leadership in India through fellowships and thought leadership. And he's also the founder of Aspire Impact Ratings, which is India's and Global South's first standards based impact ratings and certification company. Welcome, Amit, and thank you for being a part of this effort with me. We also have amongst us respected journalists and media personalities. And most importantly, I'd like to welcome our audience. It's a Thursday, and it can sometimes feel like the almost there day as we eagerly await the arrival of Friday. You could be doing multiple things at this point in time, but you chose to be with us, join us for this launch, for which Amit and I are very grateful, very thankful. And we hope that by the end of it, you will be delighted to have chosen this event. And now, since you're here, please help us make the session trend. Use the hashtags as we'll share in the chat window to put on your social media handles with your experiences, remarks, learnings, findings, takeaways from this event. And I request that you please stay with us till the end of this event to get an exclusive link for downloading this report before the world sees it. So you'll find the link at the end of this event in your chat boxes. And I think with this, we're all set. But before we begin, I'd request all in the audience to please keep yourselves on mute. And in case you have any questions, we'll open up the floor for Q&A towards the end of this event. We have around 10-15 minutes for that. So feel free to type your questions in the chat window or send them directly to me once again through the chat window. And I think now, without much ado, let's get started with the launch of our findings. Here's a very short video to set the mood and to introduce the topic. I appreciate the patience. We'll just bring it up.
You're on mute, Harpreet.
I'm sorry. I think it has set the tone for the next 1 hour for all of us. Now to deep dive into the topic further and share the key findings of the report, I'd like to invite Amit Bhatia. So over to you, Amit.
Thank you, Harpreet, and thank you all, friends, for being here. I'm going to share my screen. I got 80 pages of this book condensed into less than 10 slides. Very quickly, look, this was not an easy effort. It took us 2 years to complete this research because every time we thought, now we are done, we have a full database, we'd come across a few more startups and a few more companies doing something and a few more carbon and emission calculators. And it took us forever to say, well, this is it. We're going to make a pause here. So firstly, the moment this research, you have your hand on the full research, I know many of you will turn to the index to see, is your name there in the 550 companies we've sampled? If it is not, I know you're going to send me some love letters. We will accept those and make sure in the next edition, every company is covered. We have tried our very best to make sure we have a bottoms up sample for the exercise we just did. So very quickly, we just introduced ourselves, but I'm the founder of Aspire, and we have for 3 years now been doing the Impact Future project. This is our 11th, publication, and the fact that such an audacious exercise in such an uncertain environment where there's a startup being born a week has not been done. We are especially delighted for this one. So here's what we have found. This is a $7.7 billion market as of 2020. This market since 2010 has grown at a 14% compounded annual growth rate, and we are expecting this to grow at 15% to $31.2 billion. These are revenue numbers of 550 organizations we found around the world across all continents doing any kind of ESG sustainability or impact measurement or management. As we analyze both, with the clients we have worked with many of these companies we interviewed, we found 9 key motivations that are driving this sector. Regulatory compliance is obviously out there, innovation, best practice adoption, investor compliance, risk management, fundraising has been a big one, authentic citizenship, for many large, and especially older brands, brand building, future readiness, or simply attracting talent. And I'm sure those of you who are from IMM companies or running one, you can see some of this as a common theme with your clients. But really, our first big finding is it's a fairly large $7.7 billion market, which is expected to grow 4x to 2030. So let's dive one level deep and disaggregate this. As we started looking at all these companies, and we were asking, how do you segregate this into neat segments that there is some commonality in how that particular segment is growing? So we ended up creating 5 subsectors or 5 segments. And you can see them on your screen. Everyone trying to do principles, frameworks, or standards. That's one segment. That is going to grow to just about $1 billion. A lot of these were not-for-profits, so we had no other choice but to see the total grants that they had raised or total budgets and treat it as quasi-revenues because we were doing a market sizing. But they were out there. Many of them were subscription-based, initiatives, and their members were paying for this. Second, consulting and services. This is the biggest of the 5 segments by absolute dollars, but it's not growing the fastest. And the third, which is actually growing the fastest, is everyone who's in the databases, indices, ratings, and rankings. In fact, this particular segment is going to be growing at 28% CAGR, which is twice the growth rate of the average of the other 4. So if you are right now a person in one of these companies or building one, you should be rest assured that our research found that this is going to grow the fastest as the demand for this is the most, as companies want to know, financial institutions and even non-profits want to know where they stand, how they rate, and they want to wear a third-party assessment on their sleeves and talk to the world. Another small, subsection was executive education and training. As you can, well expect, that there's a lot of training required. It was again a small, but we expect this to be well over $1 billion. In fact, one of our future publication is on the role of the Chief Impact Officer, which will be out, next quarter. And lastly, but fairly importantly, we had the software and technology sector, because there were so many people finding technology solutions that's going to be a fairly large segment. So I think just as you look at these 5 segments, I hope you understand that in trying to decipher this, we felt these 5 sub-segments most neatly disaggregate the larger IMM sector, and all have unique features. And I think, and this growth rate that we are projecting for each is therefore representative of the kind of demand they are facing and the kind of momentum they all have. But we also did the same thing for India, because many of you, our guests here, are from India, and we are headquartered in India, and there was obvious curiosity. So India at the same time was about $138 million market, and growing to $531 million, significant, in the context of Asia Pacific, but not significant in the global context. In fact, we looked at what was the share of total ESG sustainability impact investments for India around the world, and that was just north of 1%. But the share in IMM was 1.5% and growing to 2%, largely because all the big IMM companies, and especially the big ESG rating companies, they all have big back offices in India who are doing global work, and that is leading to this, bigger share than the share in investing. Let me now turn to some interesting market insights. Our first other insight was that there were very few of these companies that had existed before 1995, only 20%. 80% of the companies that are in our sample, and including nonprofits, they were born after COP1. They were born as this movement grew momentum, and almost a quarter of the 550 that we looked at, they were actually born in just the last 5 years. So this is a segment with very recent, new companies, which are growing at a very, very fast pace. Another interesting insight was, that almost 80% of these organizations are headquartered in Americas or Europe. Very few in, Asia Pacific or Africa. So if you look at the, pie chart, 43%, in Americas, 38% in Europe, and rest around the world. So clearly, developed world continues to have a majority of the organizations solving these problems, also for the developing world. A third insight was, we tried to cut these, organizations. Were they pure play, ESG sustainability impact measurement management company, or were they diversified company? So for practices of this, S&P, or Moody's, they have been called diversified because they were also doing credit ratings and other products, and just, extended their offerings into the ESG sustainability impact, measurement management market. Most of these companies, 75%, were actually pure play, which shows that that most of the people, whether they might be on this call, are those focused totally on this segment. This is not an also play for them, but a quarter of these companies, and especially the big ones, especially in the technology sector, we found a lot who were doing, other business applications. Let's make another, an ESG, tool as well, or let's make an emission calculator as well. So tech companies and credit rating companies and some large consulting companies were the kind of diversified companies that have entered this, but 75% are pure play. Another finding was around talent. And we found, while the database and indices and rating ranking was growing the fastest, the majority of talent was still concentrated in consulting and services, almost 60%. And some of the others, like executive education training, principals training, are very, very thinly populated in terms of talent. So the last finding was really around this talent. So these were the 4 key findings around, how these players stacked up. Let me take you to another view. And this is around consolidation. We are, it was but obvious to conclude it's a highly, highly fragmented market. There were no big players, not one which had a double digit or even, of 5% market share. which is an absolute sign of a fragmented market. And we found that we could count 80 plus M&A deals worth over $100 million in just the last, 12 years. And you can see most of them, bulk of them, 50 of them were in the last 2 years. This is a sign that and just looking at the sector, that as the sector starts to mature, there's more M&A coming. It may take 3, 5, or 7 years for the sector to mature, but in the near term, while we are seeing way more new companies and startups being born and new companies addressing this, we believe that this consolidation will pick up. Obviously, there's going to be segregation of the players, as the big ones and the more prominent ones, or those having the most impact, continue to grow. Many smaller ones are likely to perish. Okay, so we are expecting a significant consolidation in the IMM market. And finally, I want to just talk about some of the key takeaways we had. And you are going to hear all our guests here, Cliff, Fran, Rosemary, Anurag, they've all looked at the report and they will all give you their insights as well. But I think here are, if we had to take some large generalizations from the research, and one clearly is that there is both growth and consolidation happening side by side in the IMM sector. And 15% compounded annual growth rate to be sustained till 2030 is not, if at all, we are likely to have missed out, several startups. So the degree of margin of our mistake will only be towards underestimating the sector, not overestimating the sector. And if we have made errors, they'll only be towards underestimation. This could turn out to be bigger than 32 billion as we project in 2030. Second is the standardization versus, independent frameworks. I think this is a wrong debate to have. We believe, and we have found in talking to people, that national regulatory, disclosures and guidelines will lead to one set of frameworks and measurement and methodologies, and independent standards will continue to thrive and continue to compete for gold standards. We are completely convinced trying to find that one big, unifying global standard is barking up the wrong tree. So there are going to be multiple standards and multiple kind of frameworks which will compete. The nation states and regulators are going to set the minimum, disclosure requirements and the minimum, reporting standards. And then, progressive corporations, financial institutions, even NPOs in there, they will compete to, embrace the gold standards, to show that they are doing much more for the social or environmental world. Another insight around consulting and services was, we believe this will continue to be a big recruiter, and it's going to continue to, thrive, largely because the more the frameworks, the more the confusion, the more the demystification requirement on parts of clients to want to understand what methodology to, adopt, what technology tool to adopt, what kind of initiatives should I prioritize for my net zero campaign or carbon. So this is going to continue. And therefore, consulting services is going to stay an important, piece of the IMM puzzle. I think on databases and role of indices and ratings, I think the real, the litmus test for all these companies will be on who's going to bring out the best comparables module. The jury is out, who's going to lead. And US, you would have read about significant criticism of the ESG companies. One of the things I keep telling our client is using the same BRSR disclosure data that Indian government mandates for the top 1,000 companies. It is very easy in every peer group, in every sector, for one agency to say a particular bank is the best in class, and another agency says that's the worst in class. Now, this kind of incongruence does not do well to the IMM sector. So the jury is out. I think if at all, the only thing we can conclude is the people you think are leaders today may not always be leaders. This is going to be, the jury's out who's going to win this, but ultimately the companies that can bring the best comparable data fastest to the market in a way that goes a little bit beyond the public data and uses tools like artificial intelligence. I think that's going to be the key thing. We play in that market, so we know what we're doing. We started with impact assessment largely to access proprietary data and not to start working with public data. On technology, I think, this is, it's already proliferated. The big, even ERP players have jumped into this, as you will read our report. It is but natural that those are signals that large ERP players are thinking this is an important module that they need to integrate into their offering. They are obviously also trying to make sure no new competition tries to step in this way, for the large, application players. So I think this is, again, something where I think in the medium to long run, the big guys are likely to dominate. And executive education, I think, as we said in the opening, there's, still room for this to grow dramatically. The world is not doing enough to create a future generation of chief impact officers. So those were some of our important key takeaways. In the end, I do want to actually highlight that as we were doing this, we looked at some of the past research on this field, and there was research done, and as you can see, the 4 other reports here, by Jane India's Impact Investors Council, ADB, and Oxford University, which was actually where GST was a partner, and in all this research so far, people have focused on the methodologies. So the fact that we are the first to build a sample of this 550 plus organizations have forecast till 2030. We're happy we've had a chance to share with you. I wanted to just thank Harpreet, my colleague, and several of the team members who, helped us, like Sayan, who's on the call today in building this, database. So thank you all. And with this, I'm going to pass this back to Harpreet. We'll be available to answer questions, a little bit later. But Harpreet, back to you.
Thank you, Amit. I think it was quite insightful for all our audience. And thank you, Amit, for running all of us through the key findings of this research, the 5 segments, the role of different actors, and particularly how crucial IMM is for India as well as for the world in achieving the net zero goals and such targets. So now I'd like to invite our guests. Firstly, Mr. Cliff Pryor, to share his kind observations and views about the findings and the global IMM landscape. Over to you, Cliff.
Thank you very much. Thanks, Harpreet. Thanks, Amit. Thanks for Anurag as well for the Capgemini part of this work. Really outstanding work. And across the world, we're seeing an absolute dearth of the skilled, trained staff who are needed. A real huge gap of the trained staff that are needed, who can deliver the essential work on data, on tech, on services, on analysis, and whether that's executive level or on the side of reporting and just working on the raw data. It's becoming demanded both by businesses and investments and for regulatory requirements as well, and of course within companies and investors. Just to use that data for improvements in their work. So this is first of its kind global report. It's crucial. It's a comprehensive analysis. IMM, industry providing the essential support services to make ESG and sustainable and impact investing work in practice. And I think the segmentation that you've made, consulting, data, tech, training, principles and standards, hope I've got it right there, that gives us specific entry points and insights for the future workforce, which is really valuable. I thought I was going to have an argument with you, Amit, about having too many individual and bespoke indices and systems when what we really need is global, harmonized and reporting systems. But maybe I'm not, because I think, when you look at companies and consultancies working in this field, it means we do need to stop using bespoke standards, and we need to start working on actually where the two real value points are. One of which is the specific edge for the micro area that you're particularly working in. It's not in the ISSB system, so you're adding on top of an initial golden level, but also because it's how you use the standards for best effect. That's the deployment edge, and that's where I think the consultants and the the best companies and so on will be using that. So a specific edge and also a deployment edge. The numbers showing what's moving in this field, 7 billion to 30 billion over 10 years, just demonstrating just how significant this field is becoming, and how many staff will be required for this field. And I take 2030 as the critical time to consider. Everybody talks about 2050 and net zero. If we don't do things by 2030, 2050 is a delusion. People think it's another generation away, and we have very little time, particularly with vulnerable populations and what's already happening. I know Rosemary and Fran are in North America and probably looking out the window to some sort of golden haze of smog from the huge fires that are burning in Canada. So we must stop thinking about a generation away and thinking about 2030 and the critical point there. And India, of course, had 50 Celsius last year, which is just so close to the edge of human life. And what Pakistan had with a third of its landmass away, and China, prolonged drought. What we're having now in Europe is Portugal and Spain in levels of drought, which mean that their crops will not live. And at the same time, we've got the populations that are blocking essential climate action. And why do they block it? They block it because they don't believe that there's social justice in these changes. Climate change denialists put flame to the fire on it. This extraordinary situation in some states of America where ESG is becoming a sort of equivalent of 1930s book burning. It's I thought we'd got away from all that. So people must be able to see and trust to support a net zero future. So we need that just transition, the environmental action, socioeconomic action, and community voice to achieve that sense of justice. And whether that's about greenhouse gases or biodiversity or oceans, whether it's about social justice with decent jobs and livelihoods, we have to act on our future and make it happen. And we must know that the actions that we take are real and vital. And that's where, this trustworthy data and evidence is crucial, not just to the companies and the investors, but to the population at large. It's as crucial as let's think in healthcare. The great majority of people trust doctors, and they trust doctors because they know there is evidence behind it. We need that similar evidence behind this work, so that populations know it's real and can be trusted. I'm not saying it's going to be perfect. In fact, if it shouldn't be perfect, because we have to put urgency as our keyword. But I think this work will be done. It will be strong. It will be strong enough. It will be trusted enough. Perhaps one area that I'd further pick up, you mentioned tech, and you mentioned just a little bit there about AI. My guess is that the people who can work, use, and interpret AI will be the most needed of any sector of staff in this field. Look, we need the harmonized standards, we need the taxonomies, we need the reporting regulations, scope 3 impact evaluation, all of that. But without the training and skills and people with the technology and standards, it won't work. We have to do this. This report and the action that it takes forward will make a crucial part of the positive movement for our people and our shared planet. So thank you again, Amit Bhatia, the Aspire teams, the Gemini team. Thank you.
Thank you, Cliff, for the appreciation and the encouragement, and also thank you for your valuable insights, and very rightly pointing out that the window for action is limited and the time to act is now. So thank you. Next, I would want to invite Rosemary for her comments. Rosemary, over to you.
Thanks very much, Harpreet, and congratulations to you on your first report, and to Amit and the rest of the team for continuing to make this contribution to our understanding of the field. Also to Capgemini and partners for sponsoring it, and for everyone who's contributed and taken the professional risks of stepping into this field as people see it start to come forward. I loved your opening video. It reminded me of William Blake's comment that what's now proven was only once imagined, and keeping hold of that sense of possibility, challenging people that we can lift the aspiration around this is really important. I know, Amit, that you often like to open a keynote with a reference to a historical figure. And so today I thought I would bring to mind Luca Pacioli, who in the late 15th century, as a mathematician, is credited by many as being the father of modern accounting. It was Pacioli who set out in his treatise on mathematics a blueprint and framework for the merchants of Venice as they moved into what we now call double entry bookkeeping. In the vernacular, he set out that if we're going to undertake this kind of practice, we need to track orders and stock and sales and cost of goods. We've obviously had centuries of practice and development that have built on this. To put it into context, at that time, people were still mainly using Roman numerals. So what's been achieved in accounting, the fact that there are still ranges of approaches and areas where we can have robust debates, but it's good enough for us to move forward and rely upon to make decisions, really resounds for the possibility of sustainability and impact measurement and management, and also speaks to the work before us, emphasising and underscoring what Cliff just said, that the runway here for us to make a significant difference is short. And these are themes that I want to come back to. The focus on the dimensions of this part of the market matter for a number of reasons, and it's remarkable to think about the progress that we've made since Amit and some of us on the call worked together on a report about what it would really take to widen and deepen the markets for impact and sustainability, not even 5 years ago when we released that report, and already so much has shifted. We know that deepening practice is imperative to fulfilling the promise of impact and sustainability. This audience will be familiar with the major challenges of our context, and Cliff mentioned some of them. But tackling climate change, developing cleaner, leaner and greener sources of energy, meeting the health imperatives, including ageing populations. And we need to do this within a geopolitical environment that's increasingly fractious, within the context where vested interests feel seriously challenged, and where a wave of technology, including artificial intelligence, are coming through, and we're yet to fully appreciate and harness that. And we need to do this without losing human agency and keep our focus on better outcomes for people and the planet. So without clear intentions and real development of the kind of market highlighted in the report, we won't get to an indication of the progress that's being made, or understand whether the small inroads continue to be outweighed by other activity that's still doing harm. The equivalent I refer to sometimes of continuing to dig big holes in the backyard and argue what kind of teaspoons we might fill them up with. We need to move beyond well-intentioned efforts to really deepening this practice in order to fulfill the promise of it. And there's a risk that if we're not putting our awareness on this, that we entrench the dynamics of a system that we have currently that still overemphasises financial capital and returns. As Cliff highlighted, we need meaningful information, because without that, it's really harder for people to make good choices. But if too much is done in the name of impact without the reflection and accountability that the kind of services highlighted in this report bring forward, then there's a risk of disappointment, or worse, that we get more of the cynicism and loss of confidence feeding into the politicisation. The second reason that this report is really important is because it gives dimension to and highlights another key lever for us making progress overall in impact markets, and that's strengthening and deepening intermediation. Amit spoke to what we've seen in a rapid acceleration of new players, and we need systematic ways to continue in which we can communicate about impact, compare performance, and all of these also help bridge those who are seeking and offering finance and developing solutions to actually be able to reach the market and to scale, which is vital to us being able to achieve progress and also to unlock capital and to be able to really know who is doing what in a way that is capable of creating the change that we want to see. So supporting new and existing intermediaries is key to also mobilising the talent and critical skills that Cliff spoke about. And this report highlights how existing intermediaries have a big role to play, and so do new ones, and how we see this play out in terms of the consolidation, but also the different kinds of specialisation that will develop is going to be really important. It also shows that leaders can accelerate the progress by their example, and that we can develop trust and inspiration for others to actually step in where we see that happening. And so the focus that this report puts on that is a really important point in terms of us now garnering more and more people to step in and be part of the practice of IMM, have confidence that it's possible that you can work with trusted partners to develop that. Michael Lewis, who's famous for writing The Big Short and Moneyball, among other things, reminded us recently in his podcast Against the Rules that we may be in danger in some places of mistaking numbers and measurement for answers when they're in fact the prompt for the next question. I think this is something that we need to keep coming back to as a touch point when we look at the development of sustainability and impact measurement and management. Because the big questions before us are what's needed next for this, not only to fulfil the promise, but to continue to grow new disciplines, but most importantly for this practice to be really taking us towards a more sustainable future. There are lots of areas at the moment where there are important developments, the most significant shake-up in the way we think about performance, certainly since the Second World War, possibly longer. There are also areas where there are vested interests. There are areas where it's hard for people to look beyond the frameworks that they know. And there are areas where we might have the veneer of progress or the illusion of progress, which is in some ways the thing we need to be the most careful about, because it's only real progress that will help us to resolve the issues, to continue for this planet to be habitable in ways that also don't create the level of social inequity and unrest that will create other dangers and risks of their own. So the work ahead of us now is to build on what we understand, to continue to tease out impact, delivering benefit and solutions from where ESG is currently in the market, and to ensure that we're actively avoiding harm and driving solutions. Capacity development, as Cliff highlighted, is absolutely key. And if you haven't seen it, I highly recommend Kate Ruff and Sarah Olson's excellent paper about the next frontier in impact measurement isn't measurement at all. It sets out a compelling case for analytical capability, and I think it's important because as we see the quest for consistency and comparability, which are important, we need to remember that if that takes us to a place where everything's the same, everything will look the same and we will lose the meaning. We need to understand apples and apples. We also need to understand the difference between apples and oranges and eggplants. And we need people who are capable of doing that analysis in ways that are meaningful and inform decision-making and action. Critical enabler is the evolution that's ongoing from measurement to management and practice that can inform decision-making in all of its aspects and that help us to focus on understanding context, setting strategies, managing performance, transparency, and the governance that's necessary to ensure that this is done well and in an accountable way. Whose voices get heard in this process will be really important to ensuring that the benefits are shared equally. In the case of some of the challenges we face, nobody wins unless we all move forward. So we need to pay attention to what we're hearing from communities, to stakeholders, and from the planet. All of these things are vital to see sustainability and impact go from an add-on to what gets done to the way that things are done. Critical to integrity and to answering the really big question, are we making progress to a more sustainable future? Sustainability and impact are on the agenda. Things like this report are critical to reinforcing the potential and the possibility of that. So it's on the agenda and now we need to make it count. Thanks very much, everyone, for your interest today.
Thank you, Rosemary. We appreciate your deep dive into the topic. And I think you're right in saying that old systems need to change. Capitalism 1.0 needs to make a way for capitalism 2.0, and how different actors have an indispensable role to play in this transition. So thank you very much for your comments. Now I'd like to invite Fran for her remarks. Fran, over to you.
Good morning, good afternoon, good evening, everyone. Great to see you all. And thanks to Amit, Harpreet, Aspire Impact, and Aspire Circle for inviting me to visit with you today. And thank you to Capgemini for supporting this work. My name is Fran Siegel. I serve in two roles as president of the U.S. Impact Investing Alliance, which is a field building organization, and executive director of the Tipping Point Fund on Impact Investing, which is a grant-making entity. Both organizations are dedicated to building the impact investing field to help manifest a more equitable economic system. We're here today to celebrate the launch of a report that shines a bright light on the ESG and impact measurement and management market. But we're also here today to consider our collective role in advancing what the authors call the advent of impact capitalism. As the authors note, we're in a transition period where investors, workers, communities, customers, and other stakeholders are calling on asset owners, asset managers, and corporations to think beyond short-term profit maximization and instead focus on long-term sustainability and shared prosperity. We at the U.S. Impact Investing Alliance and at the Tipping Point Fund believe that impact investors have a critical role to play in challenging the status quo to create a more transparent, accountable, and equitable economic system. We believe that that transition or evolution is really important, that impact transparency will lead to impact accountability, and that impact accountability, we hope over time, will lead to a more equitable economic system. Core to this vision is a need to scale our field with impact integrity, which will require that we channel our resources to support underlying infrastructure that enables the impactful deployment of capital, which is why this report represents a meaningful step forward, because it helps us better understand the current and potential future size and composition of select field building functions that enable capital to flow with impact integrity. What we think readers will find very helpful about this research is the clear distillation and categorization of the 5 impact measurement and management functions. So just to lay them out, but Amit and Harpreet, if I may, I'll lay them out in a slightly different order than you do. You, I believe, order them by market size, and I ordered them a little bit more as they intuitively happen in the market. So the backbone of impact measurement and management are the principles, framework, standards, and coalitions that exist. So from SASB, which is now embedded in the ISSB, to GRI and beyond. This is where some of the most critical work happens, but also where our field receives the most criticism regarding the fragmentation of the market. And I take Rosemary's point and Cliff's point about, fragmentation. A certain amount of fragmentation is good, but I agree with Amit that we will see, especially driven by global and local regulatory regimes, we're going to see some consolidation, further consolidation. I think a portion of the report that was especially helpful to me was a section that demystifies this pillar in particular, to break down the important differences between principles, frameworks, and standards, and talk about which ones are most relevant to different stakeholders. So we have data, and that will lead to the next category of databases, indices, ranking, and ratings, which, as Rosemary indicated, is predicated on clear, comparable, decision-useful data that a range of stakeholders, including but not limited to investors, also asset managers and corporations, will disclose. And they will seek out to quantify their impact and to comply with these evolving regulatory requirements across jurisdictions. And we could have a whole other webinar to discuss. So of course, within these segments, as Amit mentioned, we have Sustainalytics, S&P Global, MSCI, well-known actors, as well as some smaller emerging actors. Software and technology are critical for enabling more innovative and efficient measurement and management methodologies. Here, the Tipping Point Fund has funded some work specifically around data infrastructure and the need to data tag, so that when we have this flow of data that will be coming as a result of regulation, albeit I agree with Amit, regulation will be a low bar to start, that it is tagged and broadly usable across jurisdictions and across stakeholders. Of course, we have the big consulting and services market segment, again, according to the report, anticipated to reach about $12 billion by 2030 in its own right. So here we have the traditional organizations like our co-host Capgemini, BCG, and many others, but also some newer pure play entities like Bluemark and 60 Decibels that fit within this cohort. They offer guidance, verification, essential insights for organizations measuring and managing their impact. And the Tipping Point Fund is a proud grant funder of both Bluemark and 60 Decibels. And finally, others have talked about executive training and education. We really see this as critical to fostering the next generation of impact leaders and diversifying the talent base that Amit talked about. So Amit, and Harpreet, I love some of these, the slides that you showed, especially the mandala of the very, very crowded field. I want that on a t-shirt if you can make it. And it's a way it's like this click beyond that, the beautiful SDGs logo, like this messy, complex, fast-moving, crowded field is what is required to deliver impact transparency. So hoping that this report gives the reader a better understanding of how to harness measurement and management tools to advance toward an impact economy. We believe that together we can build on the findings of this research to support the continued growth of impact investing, ESG investing, sustainable investing with urgency and integrity. To do so, it's up to impact investors and other field actors to support the critical infrastructure that enables their work, a practice that has largely fallen to philanthropy to date and should be the responsibility of all who deploy impact capital. Impact measurement and management make up just one part of the impact investing field infrastructure that requires support and evolution. Other essential field building aspects include public policy, we touched on that a little bit, public engagement, network groups, and financial innovations like catalytic capital practices. But it's important to note that impact measurement and management form the core building blocks for catalyzing a movement to transform finance and to build a more equitable and sustainable economy for all. So looking forward to being on this evolutionary journey and the revolutionary journey with all of you. Thank you.
Thank you so much, Fran. We appreciate your very thoughtful take on the 5 market segments, and also for highlighting a couple of important chapters in the book, one being demystifying the principles, frameworks, and standards, and the other one, the creatives that we've put for the global market and the Indian market. Thank you so much. So I've been receiving questions from the audience on when the book will be available. So I'd request everybody to please be patient, because at the end of this event, we'll be sharing the link for download in the chat window. You can go and then download the books from our website. Now I'll request Mr. Anurag Pratap for his comments. Over to you, Anurag.
Thank you, Harpreet. Good morning, good evening, good afternoon. I know that we are from all zones sitting and listening here. Hope I am audible and visible there to everyone. And I'll be taking what Fran said, that we should come out with a T-shirt with all these mandala out there, and then let's make some of these topics become something that everyone is start talking about it without getting into, I'll say, mystique behind it. But we need to somewhere make this topic part of our day-to-day discussion, and then only we can bring in the whole debate or discussion on transparency, accountability, equity, justice become something which is backed by data rather than by rhetoric, backed by hard facts rather than just by our own opinion there. And that's where I feel extremely proud of what Amit and his team has done. For us at Capgemini in India, when we started the supporting the Impact Future project, we knew that this has the potential to shape up the whole discussion on impact funding. This has the potential to facilitate a discussion around impact as the core pillar of our investment in the ESG spaces there. And I'm delighted to know that that's where we are moving there. With 11 publications coming out this year, 4 in pipeline, what Harpreet said, there can't be better phase for development sector, for ESG practice, for people who are really passionate about bringing justice, bringing impact, bringing equity to the forefront of everything that we are doing. The 11th publication on the global market sizing of IMM, this in number of ways support the thought leadership initiative. This in number of ways promote the whole idea that we need to somewhere bring in data at the center of some of the discussion that we are doing. We need to bring in the facts at very and we need to make fact at the mainstream of our decision-making processes there. And I congratulate Aspire Circle, Aspire Impact on achieving what few years back it was difficult to even think of. So thank you, Amit, for being visionary. Thank you for giving us at Capgemini an idea to support, which it looked very risky at the start of it. But as we started the journey, we realized that this is something that we should have been there much earlier than what now that we've started doing it. I also feel that India, we see what is called very initial growth in this particular space, but the numbers are talking, or numbers are giving us a trend that this will only grow in a way that it will surprise many people. From $138 million to $531 within 10-year span of 2020 to 2030. I'm sure that this will, in number of ways, bring in a new way of engaging with this particular space there, new way of bringing in investment to ensure that we keep impact at the center rather than rhetoric at the base of everything and anything that we are doing. So the changes that's happening there in BRSR reporting, some of the changes that has already happened, some of the changes which are in pipeline, I'm sure that India market will consolidate and record stellar growth there in this particular space. For us at Capgemini, we are committed to sustainability. We are committed both in terms of our financial commitment and also our thought leadership commitment on sustainability. We have a public target of halving our emission by 2030, net zero by 2040. We are measuring the impact of our operation and our CSR and philanthropy scientifically, and we are looking at how we can embrace the NPO standard released by Aspire under the Impact Future project. And we have started this particular journey. We did few this year. We'll be doing a number of studies next year with our projects where we have invested significantly to understand how we are impacting the communities, the issues, the challenges, the problem statement on which we wanted to really bring in the change there. Last year we came out with, in partnership with Aspire, an impact report which was rated gold on our work on education, and this was done by SRA Foundation. This year there is a few more are in pipeline. I am sure that these will become number of ways a guiding document for many of the ESG practitioners, many of the CSR heads who are part of this particular discussion discourse. They'll have a number of things to draw from these reports, number of things to really implement, replicate in their own project that they're doing. And that's what the whole aim and intent of some of these processes are. Finally, we stayed committed in India and allowing the world to further the impact movement. For us, this is real. For us, this is something that is needed to really bring in authenticity to the work that's happening in this particular space. There is a reason to bring in ethics in everything that we are doing in the ESG space, and that's where it's very important to remain committed there. Amit spoke at our global CSR summit there, and his speech in a number of ways helped us to look at globally in various countries how to move into impact science, how to what is called improvise the impact science in our own realm of work that we are doing. We hope to continue supporting the Impact Future project in coming years and bringing in some of the bold research, bringing in things that earlier it was difficult to think about, bringing in those ideas, those thought processes, leaders like speakers who spoke today on a platform so that practitioners can enrich from the experience and wisdom that all three of speakers brought in there. I'll again use this opportunity to congratulate Amit, his team for thinking, delivering, bringing in things that it was difficult to think about just a few years back there. Thank you, Harpreet, for this opportunity.
Thank you, Anurag. Thank you. And please accept our deep gratitude to you and Capgemini for its continued support of our research initiatives and being a visionary with us to support us in all of this. I think, so this is it. Thank you. I hope it was a good hour spent. Please stay with us for a couple more minutes while we share the link to download a free copy. Thank you everyone who joined us today. Thank you, Cliff, Rosemary, Fran, Anurag, Pratap, and Amit for being here. Also, I think we cannot end without giving a huge shout out to our esteemed clients who chose to partner us on their impact measurement journeys through our comprehensive impact assessment or CI offering. I'd also especially like to thank Mr. Ronald Cohen, who's the president and co-founder at GSG, Navneet Munot, MD and CEO, HDFC Asset Management, and Visa Lakshmi Chandramouli, Managing Partner, Tata Capital Healthcare Fund, who could not be here today, but wholeheartedly supported our efforts and sent their messages to be included in the publication. Now, I think we're ready to share the link for your exclusive free copy of the report. You can find the link in the chat window. And we're also committed to continue our efforts in the impact economy space. Our next upcoming event is going to be a T20 side event in Delhi on 27th of July. So we look forward to that one next. So thank you all. Have a good day. I'll pass it over to Amit to do the closing. Thank you, everyone.
Great. And while you all get that download, I just want to make sure I can personally thank once again Cliff, Rosemary, Fran, and Anurag for being with us This is a little bit like old times. I don't know if you noticed, we have Alejandro from Argentina here. We have Eddie Razak from Saudi Arabia or Malaysia. I don't know. Manfred, who used to be part of our Central American app, is in Australia now. You know, we have Corey Glickman from Pittsburgh, James Robbie from London, as you know, and many others who've been involved part of the journey. So thank you all. I can't name all the 100 plus, but we see you and we are grateful that you could, give us this hour. Please do send us feedback on the report. I know we'll have many mistakes. And like I said, if most of our errors will be around underestimation, because we just had to draw lines as we can't keep tab of every new startup, okay, that is coming up into this area. But I think given that there is a first, draw here, there'll be many more who will be emboldened to follow. The full database is in the annexure of 550 companies. And I think this is a great sector that all of you are collectively shaping. So thank you very much, everyone, for being here. Thank you all, and we'll meet again soon.
Thank you.
Yeah, that's the event. And we have two working groups who are going to kick off shortly for this. This is a G20, T20 side event focused largely on the climate side. And many of our partners, like I see Karthik Desai is here in the group. Karthik, thanks. And, we are going to work with all of you to make sure that this also takes off. So please do download the reports and goodbye. Have a great weekend ahead.
Thank you.
Bye-bye.